we set this up weeks ago. It's great to have you on.
Nice to be here.
Because while energy is exempt from tariffs, steel and aluminum are not. I'm told to build a pipeline, there's a lot of metal. Where do you come in on the current tariffs?
Yeah. So look, with respect to energy, this is a very energy literate administration that's come into the White House. So they understand the need for collaboration between Canada, U.S., and Mexico. Energy flows ignore borders. So there's Canadian natural gas that feeds the Pacific Northwest. There's U.S. Northeast gas that feeds Canada, and then Texas gas that feeds Mexico. So it was very smart of them to exempt those. But with respect to steel and aluminum, the auto sector, of course, has also been hit with respect to the tariff that were announced a few days ago. It's going to be a bit challenging. You know, auto parts cross the border 6 or 7 times between Canada, the U.S., and Mexico before an automobile is made. So there's still not a lot of clarity around how the tariffs will actually impact the cost of it.
We're not hearing from a lot of U.S. CEOs. I get it. If I was advising a U.S. CEO, I would say, listen, just don't say anything, because you don't want to be in the line of fire. So we really appreciate you coming on and opening up your views, Francois. So if you were going to send a message to Washington, they're watching right now, on behalf of Canadian CEOs, what would that message be?
The message would be that the U.S. has been our friend for the last 75 years. It has been and will always be the #1 market in which Canadians sell their products. And we are anxious to resolve a situation and continue to be friends and see mutual benefit in growing both economies together, be it through exchange of energy or other products.
I know your pricing in parts of Canada, Western Canadian Select Oil, can be different than our WTI, so I'll say numbers to a lot of our audience that may be thinking, that's not right. Tell us about the relationship between lower oil prices and natural gas output. What is it? Is $60 oil? Do we get more oil, less oil? What does it mean for you in natural gas?
So on the natural gas side, they're largely independent. The energy equivalent of natural gas to oil is about a 6-to-1 ratio. So when natural gas is selling at $4, the energy equivalent is $24 on the oil side, and of course trading much higher than that. And that speaks to the constraints there are around natural gas around North America. Oil is a much more liquid market. The exception to that would be in the Permian, where the natural gas basically comes up as a byproduct of the oil production. So the natural gas is free, and that tends to put a bit of a ceiling on natural gas prices around North America.
So if we see oil stay at 60 or go to 50, talking WTI, not Western Canadian Select, what does that mean for natural gas prices for you, both in Canada and here, and in Mexico?
It's a question of substitution. So the cheaper oil gets, the less economic incentive there is to switch to natural gas. So when you see the oil price down around $60 or even lower than that, you'll see continued utilization of oil in all parts of the world and less fuel switching to natural gas.